Hey guys, it's a market update. We'll look at Bitcoin and Ethereum price action and then a forecast out of the next few months. We hit an all-time high and we are getting 100, 150 basis points of rate cuts coming over the autumn, maybe even more. So that's going to cause a lot of inflation over the next few years, of course. That's the whole point. You want inflation and you want dollar debasement because the debt levels are so insane in relation to GDP that you have to debase a currency, push GDP higher. So that's why we're in a bull market. The market tries to price that in. You can't be in cash, can't be in bonds. You're going to get absolutely destroyed. You have to be in hard assets, right? Gold, Bitcoin, even stocks, but gold and Bitcoin even, and Bitcoin outperforming everything else. We hit an all-time high right here. What I want to do is buy any dips 10 to 30% down. Let's see, we're 6-7% off the all-time high price. So another few percent and we're starting to get into these support levels. This one right here at 112, that's kind of the first decent support here. Maybe we get there, maybe we don't. And then down here, you've got this huge support level around 107-ish. We could get to these levels, but look, if Powell is dovish at his Jackson Hole speech, right, saying, yep, we're going to cut interest rates, maybe you don't get to these levels and you just go higher as the market tries to price in even more currency debasement, right? ETH is pretty insane. It's so volatile to trade. But you've got this huge move over the last few months of around 200%, something like that. 230%. So yeah, you're going to get pullbacks. If you get these big pullbacks in ETH, maybe just go in with your eyes shut because it is insanely volatile, right? You get these big pullbacks, but this is the first level at kind of 4,200. We're kind of there at the moment. Maybe you come down to this level, which would be 4,000, 3,800, something like that. That's actually a pretty good area for a trade, but I don't think we get to these levels if Powell is dovish in his speech, right? And I think the market's just waiting for that to see what he says, because the rate of rate cuts is going to affect prices. But look, the big idea is that they're going to cut interest rates by 150 basis points at least. That lets the Treasury refinance, create stimulus in asset prices. GDP goes higher, inflation goes higher. That's what they want to happen, so that will happen because they want to debase the previous debt by causing inflation and GDP growth. GDP growth, which is fake because you can just print money to print GDP as well. This is the game and we're still in it, right? We hit basically all-time highs just coming down from this. It doesn't feel like it's the end of what they're trying to do here, right? So that's why I'm still buying dips, trying to find areas to buy, and still dollar cost averaging Bitcoin anyway. If you trade Bitcoin, ETH, anything else, go down to the description, click the link to Bybit if you're a new user, make a deposit on there. Whatever you deposit, they will give you a deposit bonus to trade within your trading account. So all the way up to $30,000 you can get as a deposit bonus via that link below. Looking at the Bitcoin 4-year cycle and previous cycles, we are in the area where Bitcoin tends to top out. So this is a really important time, like the next 100 days or so. We could be seeing a lot of volatility, but that is usually the end of the bull market. It's usually the most volatile, right? So previous cycle, this blue one here, 0% interest rates and money printing. You had the China mining ban, but the Fed was still loose in its policy, and so we still went up to an all-time high. Well, if we're looking forward to the next 100 days, Fed's going to loosen. Why would we go down? People say, well, the Fed's cutting interest rates because the economy's slow, but they're cutting interest rates, which means that they're trying to stimulate GDP and inflation. So if the central bank's trying to stimulate that, right, then assets go higher because they're priced in the dollar. That's the whole point that we're in Bitcoin, right? The economy can sort itself out over time. It produces abundance and deflates prices over time. Long term, that's going to help you Bitcoin because you take less Bitcoin to buy those things. But short term, you're looking at the debasement of currency. So if we're getting a slowdown in the metrics that the Fed looks at, then they're going to lower interest rates and stimulate so that they can create GDP and inflation. Because the only way to sort out this debt to GDP ratio is to grow the GDP and not the debt. So this next 100 days is important, and you have to be brave here and you have to understand what your analysis is, because if you're not sure, you could get shaken out here because it is volatile around these times, right? Alt season tends to happen towards the end of a bull market as well. You're just seeing some signs of that. So you got to know what your analysis is and be brave. Me, I'm holding, got my trades on. My DCAs, my Bitcoin's just there, right? But my trades are looking forward to this end of the cycle, which I think is going to come. And if it doesn't, I lose the trades, right? If we topped out, then I lose the trades, but that's fine for me. I think we go higher. Growth in job postings, very weak. If you look at rent indexes, very weak. These are the two most important things for the Fed. If they're looking at that and they're fairly weak, then they can cut interest rates because they want inflation. They want inflation and they want GDP growth. And if it's not coming from the free market, they debase currency to get there. That's my trade. Look at this as well. We are running fiscal deficits that are similar to world wars. US fiscal deficit is near its highest outside wartime here, very large. UK as well, absolute mess, this country at the moment. We can get out of it though, right? So huge fiscal deficits. Bondholders are going to get obliterated. The only way that you reduce debt to GDP is to grow GDP and inflation. So in real terms, bondholders are absolutely blasted. You're done, right? Just losing so much purchasing power. Look at the debt levels. The only way you reduce this is by growing GDP and inflation. That's the trade that we're in Bitcoin, right? Long term and short term. While central banks around the world are trying to ease monetary policy a little bit, I'm just going to remain bullish mostly, right? When they start to tell me we're done, we created too much inflation, that's when I'll start to get bearish. Global central bank policy rate cuts by year. We're on target for a normal rate cutting cycle. US interest expense reaches $1 trillion for the first 10 months. Well, you get that down by cutting interest rates. Yes, that's going to create too much inflation. The central bank will have to pull it back. That's the next bear market. But it's not right now, right? So still long and strong. July PCE, we're looking at headline at 2.6, core 2.9. That can come down with a lot of the deflation in the rental indexes as well. They're within the ballpark. They can cut interest rates. They want to create inflation, which is the whole point we're in Bitcoin, right? If you trade Bitcoin, ETH, crypto, check the link to Bybit down below. You can get a huge deposit bonus if you're a new user. I'll also update the crypto course this week. I've recorded the video. I'm going to upload it for you guys. And then I'll post it in the Discord group when I've uploaded it so you can watch it. Free updates if you've got the course forever, as usual. Link below for that as well. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.